Okay, so in my first video, I stated that I was now comfortable using Beancount exclusively as a replacement for QuickBooks. And I wanted to do a side by side just to show certain activities in Claude versus activities in QuickBooks and just show you how much quicker and easier it is to do it in Claude as opposed to QuickBooks. So I'll start with I get a brand new client. I just want to onboard them, right? I need to put in some beginning balances. So maybe they're coming from another accountant that was just Excel based, or maybe it's from a different software. Maybe they're coming from QuickBooks. If I was starting a brand new client, and let's just say they weren't doing any sort of accounting before, they were just giving their bank statements to their tax person, for example, which is not uncommon. Um, in order to do that in QuickBooks, I would have to first off import the chart of accounts. So I can't import the balances because if the balances are attached to an account that QuickBooks doesn't recognize, it'll give me an error message. So the first thing I have to do is import the chart of accounts, which is this template. So I actually have to paste in every single account, the type, and then the detail type, and then upload that to QuickBooks so that it has a beginning chart of accounts. For some reason, it doesn't have a real estate chart of accounts template. The only thing they have is like other real estate related activities. So that has to be done manually just to get the chart of accounts up and running. Then I would have to upload a journal entry with all of the beginning balances in this template. When I take on a QuickBooks client, I actually charge them an upfront fee just for setup because it takes a couple of hours just for me to get the chart of accounts into QuickBooks and then also get all of the beginning balances into QuickBooks if they don't have anything to start with, right? So that's the process for doing it in QuickBooks. Now I'm going to show you what the process is for doing it in Claude. Now I'm just going to paste this prompt in here. I'm onboarding a new short-term rental client. I've uploaded the beginning balance sheet to Google Drive at the path, and then I'm telling it to use Beancount in order to create a beginning balance sheet. So it's already connected to Google Drive, and I have a Google Drive folder dedicated to every single client, and they just simply upload their bank statement, and they don't have to send me an email in order to say, hey, I just uploaded my bank statement, because this is actually pointed directly at Google Drive and it's checking to see when files are actually uploaded, and it's going to start completing tasks automatically. So it's going to be thinking for a little while, but you'll see how quickly it works. And this is the Google Drive. So I have a demo client folder, and I have this beginning balances. And these are all the beginning balances for the balance sheet. I'm just going to assume that it's December 31st and that there's no income statement activity. It's just the balance sheet that we have to carry over from the previous year. So it's going to go into Google Drive, get those beginning balances, and then use Beancount in order to get that beginning balance sheet. And we need that beginning balance sheet because when we look at our banking activity, there's going to be mortgage payments. And those mortgage payments are related to debt that's on the balance sheet. And you can see that just in a few seconds, it has the entire ledger ready with the chart of accounts as of December 31st, 2025, and it's telling me that it actually balances. So that's good. And you can see that took less than a minute in order for it to do that. So I've already onboarded the client. I have their beginning balances in there. And now I'm going to start to build the income statement. The other really useful thing that this does that you cannot do in QuickBooks is that it actually splits out Airbnb payments by location automatically, and it splits out the cleaning fees automatically. And I'll show you exactly how it does that. So I'm going to paste this prompt in and go through it. So it says, the client has uploaded the Airbnb payout schedule and their January bank statement to Google Drive. Gives the path to those, And then it says there are 16 Airbnb deposits on the bank statement, all showing the description with no property information. Cross-reference the payout schedule to match each bank deposit to to correct to the correct property and split the income into nightly revenue, cleaning fees, and Airbnb platform fees by property. So what it's going to do is it's actually going to take your payout schedule and it's going to cross-reference that with the bank statement so that it's allocating the payments to the correct properties and it's breaking out cleaning fees. And if you have a short-term rental, you know that's important because cleaning fees are basically a pass-through revenue. So if you're looking at your entire revenue and you're looking at the cleaning fees in there, you're actually inflating your revenue. That's not revenue that you've earned unless you clean it yourself, I suppose, which is possible. That's not revenue that you really earned because that's money coming in and money going immediately out when you're turning it over. So that's why this is like incredible. And I'm going to run this prompt. And again, it's going to access Google Drive and it's going to break this out. So I have the bank statement information is here. And then I have the Airbnb payouts here. So it's going to go to the separate folders, pull both of them, compare them, and it's going to ask for permission. It's going to accurately allocate all of the revenue to each location and break out all of the other revenue outside of just the pure nightly rate, which is very, very important when you want to look at your actual KPIs as to how your property is performing. While that's working, I'll demonstrate in QuickBooks why it's so much harder. So in QuickBooks, this is going to be your raw transaction feed, right? The first issue is that in order to get those transactions into QuickBooks, you need to sync it via Plaid. And there's always connection issues. So people who use QuickBooks will know this. Their account emails them, says, hey, can you reconnect the bank? And we can't do anything until we actually see those transactions for completeness. So the first thing is the connection issues. That's always a blocker for me with my QuickBooks clients. And that's the reason why part of the reason why I now use Beancount, because I can just upload the statement, or I can have the client upload the statement, and it's going to automatically point at that folder, and it's going to always go to work automatically, whether or not I'm at the computer or not. And so that's why it's so much better. So for example, here we have this transaction from January 8th. It's an Airbnb payment. There's nothing in the description except Airbnb payments, San Francisco, California. I have no idea what property that goes to unless I have access to the Airbnb payouts, which is possible. But then I'm going back and forth and I'm looking left and right. Okay, this is for this property. This is for this property. And then I have to assign it to the correct class in order to really assign that revenue to the correct location, to the correct property. And it's very laborious and it's very painstaking. And there's no place on QuickBooks for me to upload the Airbnb payout and tell it, hey, can you please cross-reference these and automatically class this out into the correct property? There's just no way to do that. QuickBooks has made a lot of innovations with AI. They're pretty good with recognizing, certain transactions and what they might be. But when it comes to Airbnb specifically, it's really, really difficult for it to delineate between different locations because you can't create a rule because the payouts are inconsistent. Especially if you're using Price Labs, your price is going up and down, different number of nights. There's different amounts of money that is being dumped into your checking account at different times for different locations, and there's no way to distinguish between them. And so that's why this is particularly powerful, because it allows you to do that automatically and it puts it in the ledger and it's putting it in a TXT file. And so I know what you're probably thinking. You're probably thinking, I don't have ownership over my financial information now because it's in a TXT file, which is in Claude. But that's just not true, because when we get to the end, I'll show you that first off, you're going to have your Excel financials. Second off, I can give you the TXT files that have all of the transactions in them, than just raw transactions. And that's basically just what QuickBooks is. It's just a bunch of raw transactions that they just put a front end on it, and they add up the transactions and they put it into a P&L or a balance sheet. And so, and plus, if you stop paying for QuickBooks, that's all gone too. So at the end of the day, all you have is the Excel financials. And that's exactly what you're going to have with this at the end of the process. You're going to have Excel based financials. And then I take it even a step further and I visualize it via Power BI. And then I share that Power BI dashboard with my clients. That's the limitation of QuickBooks at the end of the day. It's you're just getting the raw transaction. And if you don't have a clue in that transaction description, well, then there's really no way for you to know what certain things are and where they go.
Okay, it took a few minutes for it to actually reconcile the payments to the bank statement, but it found all 16 deposits and it was able to cross-reference all those payments to the payouts. And so all of those payouts that were dumped into the account, they include cleaning fees, they include platform fees, and we were able to get all of that broken out by location thanks to cross-referencing with the Airbnb report. And so next prompt I have is expense categorization. With expense categorization, we know that in the real world there are expenses that pertain to several different properties, and those expenses need to be allocated across many different properties. And here we just gave it an example: progressive payment of $480, allocate equally across all 4 properties, right? So let's go back to the QuickBooks side and show what we would have to do in order to allocate that. So let's go to the same expense. We're going to go to progressive, $480. We have to click on the expense. We have to split it up. We have to say insurance, property 1, 120. Then insurance, right? 120, property 2. Very manual process. This takes a while. As opposed to in Claude, we are just saying, hey, this is a shared expense, split it 4 ways, and it's going to do it automatically, right? And then here we have fixing, and now it completed all the expenses and categorized them, all 33 line items that were in the banking, and the total by property just gives you a little summary. And then at every stage, it gives you an output. So if I just wanted to look at the expenses and review that, it would give me that. But I'll wait until the end to show you what the final output is, right? So here, it gives you a couple of nuances, right? So Chewy.com, 6785. Nashville Loft, as I noticed, it is the only pet-friendly property. So this was a curveball that I sort of gave it, because it did give me a suggestion up here where it said, hey, Chewy.com is for pets. Are there any particular properties that are pet friendly? So what I told it was that Nashville is the only property that's pet friendly. Make sure that Chewy is allocated to that property going forward. So now it created a rule, right? So now let's switch over to the QuickBooks side and show what I would have to do in order to create a rule for something like that, right? So let's find the Chewy expense. So for Chewy.com, we click into it, we create a rule. So bank text contains, let's just call it Chewy, and that pertains to the, let's just say this is the Nashville property, right? So now I just created a rule that says anything that has Chewy in the description is going to go to the Nashville property. That's basically what I did with natural language in Claude. I told it, look, Nashville is the only property that's going to have Chewy. Just allocate it directly to that automatically. And it's going to remember that. And it's going to do it going forward. It's going to build upon that, and it's going to get more intelligent. So that was one sort of curveball that I threw in there. The next thing that I want to go over is breaking out principal and interest, right? This is something that I have to do constantly for my clients because they have debt on the property. Many times I have to split it out on a monthly basis when the payments come out. So let's switch back to the QuickBooks side quickly and show what we need to do in order to split out principal and interest. We need to click into the transaction, each individual transaction, and then we need to split it, right? And we can't create a rule because it changes every single month. The principal and interest changes every single month. We got to put in the amount of interest here. So let's say it's 1,000, and then the principal is 480. Got to select the class, whatever property it's related to. It's a very manual process. It takes a little while in order to do things like that, right? As opposed to Claude, I'll show you what I put in here. For mortgage payments, record principal and interest, right? It correctly identified the fact that it doesn't have enough information in order to split out the principal and interest. Basically, what it's saying is that there's no way that it could calculate, and it gave me some options in order for it to calculate. It said, do you want to put the whole thing to interest? Do you want to provide the interest rate? Because if you provide the interest rate, you can get the amortization table and you can figure out how much is principal and how much is interest. So what I told it was just make it $1,000 of interest per payment, just as a rule of thumb. And the reason why I did that is because A, this is dummy data, this is sample data, and I don't have an actual mortgage statement for these particular properties. And B, it's going to be very easy to verify whether or not it got it correct, because there should be $4,000 in interest total, $1,000 per location at the end when we look at the final output. So just to show you how accurate that it can be. So I just told it $1,000 for interest per payment. It shows me what the entry is, books it, again, creates an output that I can review. So now the next prompt is actually going to be posting journal entries. This is something that I would normally have to do manually in Excel. So what I told it was record a depreciation journal entry for January 2026. Use the cost basis. I'd basically tell it exactly how to calculate the depreciation. So let's switch over to the QuickBooks side quickly. What do we have to do in order to post a journal entry for depreciation, right? We got to go to journal entry. We got to put in a description. Then we have to say we're debiting depreciation expense for however much amount, property 1, depreciation expense, property 2, and so on and so on. And then we're crediting the accumulated depreciation. So it's 2 lines times 4 properties, it's 8 lines, and it's something that I actually have to manually calculate, right? It's so much easier to just describe the journal entry that I want to post in natural language, and it does it automatically. It even gives me the calculations so that I can check, and it gives me the exact entry that it's posting, and it understands what depreciation is. And this is, this is a little bit technical, this is a little bit nuanced, and this is why I put out content like this, because I'm not worried about a non-accountant doing things like this. Just because if your properties are complicated enough, this is not something that you can do on your own in any case. So I still provide value in that sense. You get the confidence of having the CPA reviewing everything, making sure that everything's correct, and making sure that you're allocating the expenses correctly. But you're also getting the speed and the intelligence of the AI. And so now we're sort of getting to the end, and I'm going to tell it, review all categorized transactions and identify any that need clarification before the ledger can be closed. For each flagged item, draft a direct line message. Direct line is a specific offer, which is you get your own dedicated Slack channel, and I guarantee response times. So draft a direct line message to the client, demo, client direct line, Slack channel, keep the tone conversational, like a text from their accountant, not a formal letter. Ask one clear question per message, right? I said I can't find the channel because the name was slightly different, but I told it, yes, that's the correct channel. Then it says I reviewed everything categorized so far, and then this is the questions that it actually posted. in the Slack channel. And now I'll open up Slack and you'll see that in my demo direct line, it posted all three of these, and you can see it's sent using Claude. So it does that automatically. I don't have to draft an email. I don't have to call, text, asking them, hey, what does this mean, right? So it asked a clarifying question about the mortgage interest, which I said was $1,000 per month. I gave that manually. It probably kind of picked up the fact that it's sort of weird that mortgage interest would be the same for every single property, right? It doesn't really sound right. So it's asking for a clarification. It asks for permission to send the message. I approve the message, and then it sends. I would have done it live, but I just recorded all this just to go through it rapid fire. And so sent the clarifying message. Let's assume for these purposes that the client got back to me and now I'm ready to close the books. There's no reconciliations that need to occur because Claude is already doing the reconciliations built in. It automatically, when I did the revenue and expenses, it's already making sure that all of the transactions are included in there. So there's no reconciliation necessary. I don't have to pull a bank statement, put the ending balance into the little box and then review all the transactions. I don't need to do that in QuickBooks manually because it's already done here. And I don't have to worry about missing transactions because of syncing issues in QuickBooks, right? So that's not an issue. So now, just to wrap up, ledger's now complete. Generate a property level P&L showing revenue expenses by category, and then export the data for Power BI. And I'll do the Power BI on a different video, but that's just basically how I visualize the data. It's something that all of my clients, regardless of what level you're at, they get access to a Power BI dashboard that visualizes their data exactly the way that they want. And if you want all of the classic metrics like cleaning ratio, RevPAR, net operating income, I give you all of those metrics that you need or that you want, or any sort of made up metric that you want. I can give you things related to seasonality. It just sort of depends on the market and what are the indications of success in a certain market, right? The KPIs in a ski town are going to be different than the KPIs in a beach town. So the dashboard is going to be for a separate video, but I'm just going to show you that I'm able to automatically generate the input that's going to go into the dashboard. And the important part about that input is that you know that it's not garbage in, garbage out. The input that you're putting into that dashboard and the data that you're visualizing, you can count on it because everything has been allocated correctly and you have a true sense by filtering by property how profitable each property is. And that's just so important. It's the absolute key to being able to pivot strategies, right? Some places are not meant to be short-term rentals. They just don't perform well enough in order to justify their existence. Maybe it's better as a long-term rental. Maybe it's better as a mid-term rental. These are the second level conversations that I'm able to have with my clients because I spend so little time on their actual accounting. So here I've generated the P&Ls. This is what it came out, right? So it gave me this initially. You have your nightly rental revenue. Again, we've broken out the cleaning fees, which is a separate stream of revenue. And also you want to be able to compare that to what you're paying for cleaning, right? Are you losing money on cleaning? Less the platform fees. Very important that you break that out. Operating expenses, mortgage interest. Remember what I said before? We can verify that it actually did it correctly. It's $1,000 per property, total of 4,000. So it did that correctly. And now let's go back to QuickBooks for a second, right? When you're in QuickBooks, the good thing about QuickBooks, and I give them credit, is that they have a good front end UX. So, if I say Walmart, good, contract labor, Home Depot, contract labor, let's just post that for now. We'll go to reports and we go to the profit and loss. Usually when I meet with my clients, they're using QuickBooks. This is what we're looking at. And they say, oh, contract labor was a little high this month. Can we drill down into that, right? You drill down into it and you can see all of the transactions that occurred in that period. You can't do that here, right? So this is just a hard-coded number. So I went back to Claude and I told it that I wanted to be able to drill down, create a QuickBooks style profit and loss that allows you to click into certain expenses and see the detailed transactions. So it gives me a drill down layer and it regenerated it so that I can see the detail now, right? So if the same way that if I was looking at QuickBooks and my client told me, oh, hey, $925 for cleaning, that was a little high. That was really close to what the cleaning fees that we collected. Can I see that? You can drill down into it and see the detail of every single transaction that was categorized in that category and for that particular expense. And so it's just as good as QuickBooks. It does everything that QuickBooks does. At the end of the day, you have Excel-based financials, which is basically what you would have with QuickBooks anyway, because sure, you can click around in the UX like this, but for the most part, most people are just downloading this into Excel anyway. And then once you download it, you're not getting the detail. You're just getting hard-coded numbers. And so that's just a few of the things that I'm using Claude in order to do. And of course, like in the real world, there's a lot more nuance. There's a lot more complicated things, but Claude is able to handle all of those things and more. That's why I say not only is it adequate, it's actually better. It's an easier onboarding process. I don't have to upload a chart of accounts. I don't have to upload beginning balances. I just give it the beginning balances and it has that in its holster. It's going to remember it and it's going to build upon it. I don't have to worry about allocating Airbnb payouts between properties because I can just give it the Airbnb payout and allow it to work. That part took probably about 12 minutes or so in order for it to do that. That was by far the longest part of the process, but I don't have to sit there and watch it while it does that. Expense categorization. We showed you how laborious it is to create rules. We showed you how laborious it is in order to split out expenses. That's done automatically in Claude. And not only that, we can give it rules and it's going to remember those and it's going to implement those in the following month. So much easier. We showed you mortgage, principal, and interest. So much easier than splitting it out per property, right? We could actually just give it the amortization table for the amounts in every single property, and it's going to be able to split out principal and interest automatically, and it knows automatically to reduce the principal on the balance sheet. I can describe in natural language, hey, book this entry, right? I don't have to manually think about it, calculate. These are just things that are so much easier in Claude, and I'm spending on the actual accounting and more time on the second level analysis stuff that's giving my clients an edge. It's giving my clients the ability to make decisions faster, which you have to do with short-term rentals. Everything's constantly changing. Travel patterns are changing. Guest preferences are changing, right? Pricing is constantly changing. The competition is changing. You need to be able to make decisions quickly. And I even showed you how I'm able to quickly send messages via the direct line. The direct line is another thing that I think is extremely unique. I just don't see anyone else guaranteeing response times, using Claude in order to spend less time on accounting, giving dashboards. There might be people who just do accounting, people who do dashboards, but as far as putting it all together, I'm really proud of the offering that I've been able to put together. In the next video, I'm going to go into dashboarding, where I already have the output here. This can go straight into Power BI, and then we can start visualizing things. We can start creating all different kinds of calculations. And this is just what I do all the time. I have conversations with hosts, I have conversations with my clients, and I say, hey, it's different for every single market. What do you think is a really true indicator of the success of this property? And I'm able to create custom solutions for them. So we're really putting together the AI that's accelerating the actual manual work of accounting, the CPA knowledge in order to give the confidence that the input is correct, and then the visualization side. And the conversations and the decision making. And so, and if you're interested in chatting with me, if you have 2 or more properties, of course, if you have 1 property, use this in order to do your own accounting. Be in the weeds. If you have 2 or more properties and you're looking for someone like me in order to join your team, well then please book a meeting in the link.